But inflation, you asked for the definition. Inflation is really just another tax because governments create inflation. And inflation is also probably one of the most misunderstood words in the English language, and deliberately so. I think governments around the world kind of led the campaign to redefine inflation. So if you go back to the origin of the word, and if you have a dictionary, even from the 1980s, a Webster's dictionary, you'll get the real definition of inflation. So inflation is an expansion of the money supply. That's all it is. Deflation is a contraction of the money supply. So if you even think about the word inflate, inflate is to expand, like a balloon. If you fill a balloon with air, it expands. So with inflation, what's being expanded is the money supply. And who expands the money supply? Governments. Or they do it generally now through a central bank, but it's the central banks of these governments that are expanding the money supply. Now, when you expand the money supply, you have more money. Well, if you have more money, but you don't have more stuff to buy, well, the price of everything goes up. That's just basic economic supply and demand. The more money there is, the less each individual monetary unit is worth. And now prices go up. Now, what governments have done is they've said, prices going up, that's inflation. No, it's not. That is the consequence of inflation because prices don't expand, prices go up and down as a result of inflation. Now, what happens is sometimes prices don't go up, but you still have inflation. And that's because without that inflation, prices would have gone down. And if prices don't go down because government creates inflation, that still represents a loss to the people because they lost the benefit of lower prices. Because in capitalism, the tendency of capitalism is to reduce prices. That's why it's so good, because you keep coming up with better ways of producing, more efficient ways, economies of scale. If you look at the CPI, for example, in the United States in 1800, and then you look at the same CPI in 1900, and they have the data, prices were cut in half. You had a 100-year period where you had deflation or the money or prices falling for 100 years. And that was a good thing. All the politicians now tell us that we need prices to go up, that we must have inflation, the way they define it, of 2% a year. Why? Why do prices have to go up every year? Why can't they go down every year? Isn't that better if stuff gets cheaper? If the cost of living goes down? Of course it is. But these politicians are trying to sell this lie to the public that rising prices are somehow necessary for prosperity, that if prices don't go up.
Okay, so let me sum up what you've said. So the first thing you said that I think is worthy of note for people to remember is that the price of something is a function of the ratio of the money available to the goods available. And so if you make money twice as available, then things cost twice as much. And then you defined inflation. You defined inflation in that regard. You said inflation isn't prices going up. Inflation is the value of money going down. And so it isn't because things are becoming more expensive. It's because there's more money chasing the same amount or fewer items. Now, you could imagine an inflation in a particular sector that would emerge because that thing has become more scarce. But general inflation is a reflection of the inflation of the money supply.
Right.
And then you said, well, here's the, let me just finish the summary. You said there's drivers of that inflation of the money supply. And the basic driver is that because we have a fiat currency that isn't pegged to something permanent, let's say, like gold, and because politicians can create money by printing it, they're incentivized to do so because they can offer people who aren't paying much attention cheap gifts for nothing. And the fastest way to pay for that, because they don't want to raise taxes, is to increase the money supply. And then you might say, and this is where we could bring this home to land, is, well, what's so bad about that is that we defer our expenses into the future. People get more free stuff from the government. There's a bit of a tax. That's the inflation tax, let's say. But all in all, the system works pretty well. But you started this whole discussion by saying the biggest threat to the financial integrity of people, individuals over the long run, is inflation. And so why does that pose the cardinal danger to long-term financial security and prosperity for people?
Yeah, well, first of all, it's not working well. That is the problem. It worked much better when we had honest money. When we were on a gold standard, if governments wanted to spend money, they needed gold. And where did they get it? They had to collect taxes because they couldn't create the gold. It needed to be mined. And so it was an honest system, and it was discipline on politicians. Now, the politicians don't want to be disciplined any more than, teenagers want to chaperone at the prom, right? So, they want to do a lot of stuff that the chaperone won't allow. And so gold was keeping politicians in check. But to your point about individual prices, you can't confuse prices individually will go up and down based on the supply and demand. But if the price of one thing goes up, it's going to necessitate the price of something else to go down. And so the general level of prices won't change. It's only when you have the expansion of the money supply that the price of everything goes up because the value of money is going down. And so now you need more money to buy stuff. But the problem now is because these governments have run such enormous deficits and it, inflated the housing bubble that popped in 2008 in the U.S. and then a decade or more of massive deficit spending, quantitative easing programs. And by the way, quantitative easing is inflation. They basically, taken inflation and put a nice sounding name to it because quantitative easing is printing money and buying government bonds. That's inflation. But if the politicians said our policy is inflation, the public doesn't like that. So they said, no, we're doing quantitative easing. And somehow that sounds, more palatable than inflation. But they've created so much. And for years and years, these central bankers were telling us that inflation is too low. We don't have enough inflation because it's not 2%. And again, we don't need prices to go up. And the reason they say that prices have to go up is they claim that we won't buy stuff, that if we think prices are going to go down, we'll just hold off on buying indefinitely, waiting for a cheaper price, and the economy is going to collapse. And that's a bunch of BS because you buy things when you need them and when you can afford them. I mean, if that was true, nobody would own a cell phone, nobody would own a laptop computer, nobody would have a television set because all those things get cheaper every year, yet we keep buying them. So it's nonsense that we won't buy if prices going down. In fact, prices going down create demand. If you can't afford something, the way to buy it is for the price to go down, and then you can afford it, and then you buy it. But they've created so much inflation when they said it was too low that now it's exploded, right? You've got double-digit inflation or high single-digit inflation pretty much in all the advanced economies in the world. And no government anywhere in the world is willing to actually do what it takes to reduce inflation because A, they have to accept responsibility for creating it, and then B, they have to significantly reduce government spending and or raise taxes on middle-class voters, and neither of those choices are politically expedient. And so politicians now are under more pressure than ever to continue to finance their spending through inflation. So the inflation tax is going to get bigger and bigger and bigger every year. And the reason that that's such a problem is it's really the worst possible tax because it impacts the people the most who can afford it the least. It's the middle class, the working poor, and the retirees who are living off of fixed income. They end up paying the inflation tax the most. They have some savings, they have a pension, they have an annuity, a cash value and insurance policies. All this stuff gets destroyed. Wealthier people who tend to own assets and who have more good debt, right? Bad debt is consumer debt. You go out and you borrow money and you spend it. You buy a consumer good, you buy a TV with your credit card, and that's bad debt. Or you take a vacation and you pay for it on a credit card. But if you buy an asset, particularly an income-producing asset, a piece of property, a business, stock, if you borrow money and you buy an asset, and that asset is appreciating and generating income, inflation is your friend. Inflation helps you out because it wipes out the value of your debt and you still have the asset. So wealthy people, very wealthy people, if they invest the right way, will benefit from inflation, whereas ordinary people are going to get hurt.